What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, and the overall markets. I'm going to break down some very important things coming out for next week that are going to cause more volatility and what the charts are suggesting thus far. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 30 in total. And the offer ends at the end of March. Anyways, as far as the market is going, I want to say that SPY is showing a little bit of weakness here. We tried to break past 610 and we failed to do that. We saw a lot of shop in the very beginning only to get a sell-off at the end of the day. And the current technicals are showing that there was a bearish divergence developing on SPY. If we get a rejection here, that's going to likely pan out. Secondly, we're about to get a bearish cross in the PPO. And we're failing to hold above some key levels. We didn't even hold above 608. So there is some weakness that's building here. It's no surprise this is happening as we have some gaps to fill. So this typically could be signaling a pivot that's most likely coming. And that may cause this to start dipping to fill some of these gaps as the most likely possibility. Now, whether or not we get an immediate gap fill or if it takes a little bit of time may depend on some factors. I want to break down what those factors are first, then I'll break down what's happening with the charts. So going into next week, just remember that on Monday, we have very minor housing data coming out, nothing too serious. On Tuesday, we have some house prices data and Richmond Fed data coming out with manufacturing numbers. That could cause a little bit more volatility, but still, it's not that crazy. But then starting Wednesday, things get very crazy because as the day goes on Wednesday, we have the FOMC meeting. We have the Fed making the rate decision. We're expecting them to keep rates the same. But then we have Jerome Powell giving a speech at 2:30 p.m. Now, when Jerome Powell opens his mouth, the market tends to go bananas. It tends to make big moves. Jerome Powell is going to give us insights about what the Fed is going to do next. Is the Fed going to maintain a more dovish stance and actually cut more than initially expected? Or is the Fed going to be very careful and they may not plan, on cutting as much as many people may be thinking now? Don't forget that Mr. Trump, the president, he wants to pressure Jerome Powell and the Fed to cut more. We'll see. Does the Fed kind of like start to give into that, or will they not do that? We'll be watching that very, very closely and listen to what Jerome Powell has to say. It's very important for the way our economy is going to continue to move. It's going to give us more insights about the markets. So that's why FOMC is going to be very important. I think it's going to be one of the most important FOMC meetings going forward for what the Fed tells us about the rest of the year. And it's going to cause a lot of volatility in the markets. If the Fed starts telling us things that they are going to cut rates more, another cut is coming sooner than expected, and things like that, they're a little bit more dovish, that could help the market try to bounce. If the Fed is still a little bit concerned about inflation, they don't really give us what we want to hear, and they are still very hesitant to talk more about cuts, that could cause the market to get a rug pull. So we'll see about that, guys. Make sure you're ready for Wednesday. It's going to be a very crazy day. On Thursday, we have very minor data coming out later on. We actually have GDP numbers, which are more significant, but then after that, things become more minor. And then Fridays, when I think we have some data coming out. We have PCE data coming out as we're going to be looking for some interesting data. Not to mention, we have some employment numbers. So we're going to be looking for some volatility on Friday. Besides that, there's nothing else that's too crazy. And then, we're going to be approaching the end of January, the first month of 2025, which is pretty crazy so far. So don't forget, for data, things are more quiet on Monday and Tuesday, and starting on Wednesday, things get very serious with Jerome Powell and the Fed. And then we also have this coming out. So for the week, please remember that on Monday, we have SoFi and AT&T announcing their earnings. Okay, that may cause some volatility in finance and also in the communications sector. Then we have Boeing and GM announcing earnings, not to mention Starbucks and a few more on Tuesday. Then big tech earnings start on Wednesday. We have Tesla, Meta, Microsoft, and IBM all announcing their earnings. On Thursday, we have Apple, not to mention Intel. So get ready for some high volatility. We're going to be looking for more volatility the days after. So the earnings that come out on Wednesday after close are going to cause a big move on Thursday. And then the earnings that come out on Thursday are going to cause a big move on Friday. So watch for that very closely. The market's neutral right now. The market's in a very neutral place. We're still neutral despite the fact that the market's slowed down a bit. The put to call option ratio has dumped. And notice that we're now at extreme greed as people were closing their puts. They started to buy calls. There's a lot of call buying that was going on. Lots of puts were being closed as we saw shorts getting squeezed. But the question is, now that we're at extreme greed, is the market about to make a U-turn and start to hurt these call buyers? I'll be watching to see if that's what the market's trying to do, and we'll see if the VIX gets some kind of bounce or not. But anyways, let's talk about the market. So what do I think is going to pan out for SPY? This depends on FOMC and factors like this, but I think we're eventually going to come down to fill some of these gaps, at least all the way down towards like the 597 to 595 area we should be coming. I don't know if we're going to consolidate first and then maybe like dip later to fill the gaps before we get a bounce, or if we're about to just, start before FOMC, we just start dumping as soon as Monday and we come down to fill this gap. But eventually, I do think we're going to be coming down to fill some gaps, and we'll see if FOMC causes a bounce or not. But I anticipate some downside, and we should be coming to 603 at the very least very soon. On the QQQ, we're rejecting. We're barely holding 527 as our support. If that fails us, we're going to be looking for this gap fill. I think we could quite easily come down to fill the gap at 524. Not to mention the 520 support could be tested at our 20 EMA. So we'll see. Do we fill the gap now before we see some kind of like attempt to bounce, or do we dump even harder to come down to fill this next gap? I'll be watching that very closely. But at the very least, I do expect us to fill at least the first gap very soon, whether it's a little bit before or after FOMC, most likely. For the Russell 2000, this could be forming like a slanted inverse head and shoulders. So like this is like our left shoulder, this is our head, and then maybe we could be forming like a right shoulder here to form, a nice bounce like that. I think that there is a possibility we come down to fill that gap. We're showing a little bit of weakness here. If we end up eventually losing support at 226, we're looking for that gap fill at 224. Not to mention a bigger gap all the way down here. We'll see if we end up seeing some volatility to come down to fill this gap towards 220. So I'll give that some time. It's not that big of a move, guys. It's just a couple of points. ES is looking heavy. We're going to be watching to see if we could try to hold above this previous resistance becoming support at 61.25. If that fails us, we're looking for 6100 and 60.80 to fill this gap. So there is some risk of downside. We need to break the all-time highs to remain bullish. Otherwise, this could be dipping. So please be very, very careful, guys. I want to give you guys a warning about that. NQ is supposed to hold above 22,000. We're struggling to do that so far. So there's a very, very tough resistance at 22,000. And we have a gap to fill all the way down towards 21,706. So we could be coming down to fill that gap. So please keep that in mind, guys. That's going to be very important, at least for the way that things are looking. For other factors out there, Bitcoin is just shuffling, trading sideways right here. We could be looking for a retest of 101,000. Nvidia might be dipping more. We might start with a rebound, then we will eventually come down to fill that gap at 140, if not below. So be careful. There's a gap to fill down here, and we're getting a big rejection, a bearish engulfing candlestick, which tends to favor downside for 138 to 140. Tesla looks bearish on the daily and also on the 4-hour time frame. If you pull up the 4-hour, you guys can see that Tesla is losing this trend line of support. And now we're hitting this resistance over here. So you can draw another trend line like this. You guys can see that we've been continuing to fall just like this. So we're going to be watching to see how Tesla responds here. But as of right now, it looks like it's going to be dipping into the lower 400s. It looks a little bit more bearish to me. Let me just go over a couple more. We have big tech like Apple. Apple is showing a little weakness. It might dip closer to 220, but there is a strong support around 220 to 221 near the 200 EMA on the daily. Whether we get a big dump or a bounce is going to depend also on what happens with Apple's earnings. That's going to be what's happening at the end of next week, so get ready for that. Coin, it pumped very nicely. We actually got a nice pump, only to reject. We closed below 300, so that could be favoring a move down to about 292. We'll see if we bounce or not, but I think it dips just a tiny bit more. On Amazon, we're going to be looking for essentially 233 and then 230 is our supports. We might be dipping close to those supports, so we'll see if we get a bounce or not, so just be kind of careful. For Meta, we look bullish. We're looking for 650 as our resistance. We'll see if we break past that or not, but this looks a bit more bullish for now. For Microsoft, we have a resistance here. We're going to be looking for a dip back down to about 439. We'll see if we bounce or not. We could be dipping a little bit more, so just be careful. And last but not least, we have Google. It's on a very, very nice uptrend, but we have to see if we can try to hold above 199. As long as we're above 199, we could be favoring 202, then 204. So watch to see if that ends up being the case. Anyways, that is it for my video. I thank you all so much for listening. As far as the market goes, we're looking a bit more bearish heading into next week, especially as we have lots of gaps to fill on SPY. However, whether or not we get the big dump before or after FOMC is to be determined, and get ready for a lot of these catalysts from FOMC to big earnings. So get ready, guys. It's going to be a wild week ahead of us. Enjoy the weekend, get some rest, guys, and get ready. Prepare yourselves mentally for what's about to come. And we'll be coming back stronger for next week to get ready for the big moves that are about to be made. Thank you for listening, guys. Have a good day and peace out.